What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today, my friends. So today I'm going to talk about one of the most important topics. This is something that I get asked almost every day. It's how much margin is required to trade futures using interactive brokers. So if you're ready, my friends, let's step into the war zone. All right, guys. So the way I want to do this is I want to show you a real trade that I took last week, and then I'll talk about how much it cost and the liquidation and certain things like that. So first of all, last week here, guys, I ended up taking a swing trade on ES, which is the full size S&P 500 futures contract. So you'll see here, this is my broker statement. So I started off on February 13th. I actually made a mistake in the morning and I lost a few $100s on this trade. And then I rebought on the 13th, one contract at 49.4250, and I sold it at 50.30.25. My net profit was $4,112.50. And on that trade, you can see right here, I sold it for $4,383 on one contract. Okay. So obviously futures is extremely powerful. I'm doing one contract and I'm making 4,000 bucks. Okay. I could easily make a lot more, but here's the thing. It requires margin. Okay. And margin is a tool that you need to know how to use properly, because if you don't use it properly, you can get liquidated and it is risky. Okay. So that's why I'm going to try to shed some education on it right now. All right. So before we look at the actual margin requirements, let me just show you guys the setup, because I know a lot of you have been asking about this. So literally all I'm doing these days, guys, is the 618 Fibonacci pullback. So if we come off of this last low from the 31st of January and I pull it to the high, I went long right here, guys, on this 618 pullback. Okay. And I just used a trailing stop and I actually ended up getting trailed out on Friday and liquidated my position for a winner. Unfortunately, it didn't squeeze higher. I would love for it to have gone higher, but I'm just going to take the profits that I have. I don't want them to go back to zero, and I'm using the 4-hour chart. Okay, so now let's go ahead and talk about how much did it cost. So I'm here on the Interactive Brokers website for futures and for margin. Just type in S&P, and you'll see there's many versions. Okay, so what I'm talking about right now is ES. Okay, that's the most commonly traded E-mini S&P 500. All right. So what I have over here, guys, if you scroll up, you'll see your initial intraday, intraday maintenance, overnight initial, and overnight maintenance. So let's look at that together. So in order for me to enter a position in the intraday, I have to have at least a maintenance of 9,544.91. So the way that I look at that, guys, is I need to have at least 10K in my account. That's the way that I trade it. I try to keep it as simple as possible. However, when we move overnight, the margin requirements go up. It goes up to $13,000, okay? Plus almost 14. So always have a cushion in your account when you are trading futures, because remember, this is just your maintenance. But if it goes below the second line here, so as an example, if it goes below 8,677, your position will get liquidated intraday, or 12,395, it'll get liquidated intraday. So they will actually sell your position. Okay. Or if you're shorting, they'll cover your position. And that's just to protect you so you don't blow up your account. But you need to know that, especially if you're taking a trade and you're going to start off in the negative, you need to be aware that you could get liquidated. Okay. For most of you, however, you're going to be using something called the micros. Okay. So here's the micro contract, which is 1/10 of the ES. So now you can see the margin requirements are 1/10. This is perfect for small accounts. And I love to use this as well, because if I use micros and I do have to close some of my position, I can have 10 micros and then I can close 2 or 3 of them and still be in a trade. Okay. So that's a little pro tip right there. All right. And just remember to always look at these margin requirements. And one thing that's pretty important is, I believe, as long as you have, let's say you bought Amazon or you bought Microsoft or whatever in your account, that doesn't count towards your margin requirement if you are not using margin on those shares. So you can leverage this. Okay, it's very, very powerful. All right, guys. Obviously, there's risk involved. There's a full disclaimer below. Please read it. One thing that I would also recommend, like I said, small accounts using the MES contracts, and it also gives you a lot of flexibility in case you do need to pull your size down and not get liquidated. Okay. And finally, there's an Interactive Brokers Traders Academy for futures. There's going to be a link below And what I want you guys to do is go through the academy, okay? Because the academy is pretty amazing. It'll walk you through futures lessons step by step, okay? And there's also this education section right here. So Traders Academy, let me just show you guys real quick because I think you can learn a lot. So right here, futures, introduction of futures, go through the classes. And one that I would want you guys to take a read on is futures margin right there. And then you can actually go down to the CME group as well. And they talk about margin in a really good way here. Here's an example. If your initial margin is 8,000 and your maintenance is 6,500, what happens if your account falls to 4,200? You must liquidate your position. So please read up on this, guys. Check me out, tradingwars.com for more. And I hope you guys learned a lot. Please comment, like, and subscribe. And the links below, if you click on them, they do support me. And thank you very much for your time, your consideration. And I'll see you guys on the next one. Take care.